We just assume they have a good reason for imploding the economy, because why else would you implode the economy? But then you uncover something like this and you realize, I'm not sure they even know what they're doing.
Every country on the list faces at least 10% tariffs. Even small, remote places like the Heard and McDonald Islands, they are near Antarctica and covered in glaciers, home to many penguins, but no people.
We put a 10% tariff on an island that only has penguins? Trump would have been better off tariffing that island Tom Hanks got stranded on.
You have to go a long way to find a laugh in the mayhem caused by Trump's Liberation Day.
This is an economic Armageddon.
This is unfortunately about as bad as it gets.
The market bloodbath sparked by Trump's trade tariffs.
I'm Sharon Brett Kelly. Today on The Detail, a timeline of the last 7 days that's even got Trump's richest supporters crying out.
President Trump says his tariffs are working, but hedge fund billionaire Bill Ackman, who endorsed Donald Trump for the first time this election, disagrees.
They're warning we're heading for a self-induced economic nuclear winter, and we should start hunkering down.
Okay, so I'm joined by Rebecca Howard, news editor of Business Desk. Hi, Rebecca. Let's call Liberation Day, which was last Thursday, day one of this new world that we're in. What do you make of what happened that day? Trump out there with his whiteboard.
Trump's trade grenade. The US president has announced wide-reaching trade tariffs or taxes on foreign goods imported into the states.
Laying it all out on what countries were going to be slapped with what size tariff.
They range from 10 to almost 50%. New Zealand goods are facing what appears to be a blanket 10% import tax.
Yeah, it was a bit classic, I think, of the Trump administration in that they seem to aim for sort of shock and awe. To be fair, they imposed tariffs in their first government. They campaigned on this. They imposed tariffs earlier this year, and they were very specific about Liberation Day and what they were going to do on April 2nd. So it wasn't a huge surprise to anyone, really. But the market reaction was intense. And I think that's partly because it was worse than people were expecting.
Did the markets factor some of this in?
Absolutely. I mean, they signaled it. He said he was going to impose reciprocal tariffs on all of his trading partners. So I think the volatility just came from the sheer size of some of the tariffs that were imposed.
And the New Zealand share market, I mean, this announcement was happening kind of mid-morning last Thursday. So the US, the Northern Hemisphere markets were already closed. So New Zealand was among the first to respond. What happened there initially?
Well, I think we saw a market reaction very similar to what we saw across the globe. There was quite a lot of people selling out of different companies. New Zealand tends to follow the U.S. markets, and the futures were definitely pointing at a bit of a bloodbath. And so that's part of the reason why the New Zealand market fell, and also the Australian market fell quite sharply. We were, I think, sheltered to some degree because 10% was not quite as bad as many different sort of market watchers were expecting. I talked to Stephen Jacoby, who's, quite an expert in the whole trade area, and he basically said that it was painful, but it was a lower level than what they had been expecting. And different bank economists said the same thing. They said, it's for New Zealand, obviously having a 10% tariff is a 10% tariff. It's not nothing, but it's not, 35% or whatever. The bigger issue, I think, for analysts was what's going to happen, like what the sort of retaliation is going to be, and what does that mean sort of globally in terms of a potential, demand shock or whatever. That was the bigger issue, I think. And for exporters, I think New Zealand exporters, for the most part, had positioned themselves for some sort of tariff. So I think that also helped maybe ameliorate some of the actual impact of it.
So then let's go into day 2, Friday, New Zealand time. And there was a kind of a tariffs backlash there.
Global markets are in turmoil, reacting to Donald Trump's widespread tariffs with massive losses. US markets suffered their biggest single loss since early 2020, the year of the pandemic. The S&P 500 down almost 5%, wiping a whopping $4.1 trillion off its value. The tech-heavy Nasdaq plunged nearly 6%. The sell-off hammered shares in some of the world's biggest companies. Apple lost almost 10%, with more than 90% of its manufacturing in China, one of the countries heaviest hit by the tariffs. And Nike, also with production hubs based in Asia, lost 14%.
A sea of red, basically. The Asian stock markets extended the global rout. They just tracked the huge fall on Wall Street. I remember writing about it on Friday, but the trillions of dollars in value that was wiped off. And just, these are numbers that I think it's really hard to wrap our minds around.
What does it mean? Like you say, it's really hard for the ordinary person to wrap their heads around the trillions of dollars that we've lost from the markets. But where does that trillions of dollars go?
Well, that's the thing. Like it doesn't fall and the money doesn't just sort of vaporize. That you have someone who is selling and someone who is buying. So they're just buying at a lower level now than they were before. I think it just depends, like which side of the equation you're on, but and also when, I think people are poised right now to take advantage of this, but it's kind of like trying to catch a falling knife. When do you jump back in?
Also, is someone making a lot of money from this?
I mean, there's always someone making money, isn't there?
But who would be making money?
Fund managers and investors tend to be quite nimble, so there will be people who possibly sold out of stocks, say in the UK market, just as this was happening. And then as it became, a little bit clearer that perhaps the UK wasn't going to be quite so badly hit by this, they may well have bought back in at a lower level. And so then, that's definitely one way to make money in this kind of market.
So they're banking a profit on the quick sale of shares.
Yeah, well, they sort of took a loss, but then they were able to mitigate the loss by coming back in at a lower level.
Saturday, the New Zealand market takes a breather, but man, there was a real meltdown in those other markets in the US and other Northern Hemisphere markets.
I think that was largely because China hit back.
China has delivered on its promise to strike back at US reciprocal tariffs, Beijing announcing a slew of additional duties and restrictions against American goods. That includes a 34% levy on all imports starting next Thursday.
And they were kind of the first to retaliate. And I think the whole world was waiting to see what they were going to do anyway. And so once they did that, then I think there was a bit more madness and mayhem.
And why? Why does that retaliation from China, why does that cause madness and mayhem?
What this does really is create a situation where we may see recession, like a much bigger recession in global markets. Because obviously if China is having to pay more to import things from the U.S. into China, then Chinese people are having to pay more to buy those things. And the same is true for the U.S. And so then possibly people don't have as much money to spend. And so we have a bit of a situation where there may be less demand. And then we have like a global slowdown. And that hurts everyone. And I think that's why. I think that's why the markets were like, whoa, this is just going to get really bad. And then it's gotten even worse. Like every day, it's amazing.
We'll get to that. But also on Saturday, economist here, Shamabel Jacob, said...
But the real opportunity right now is there is a moment in history when these other countries that have been affected will want to create a club that's stronger, deeper, and with fewer barriers. We want to be in the second club that is going to rise on the back of the US retreating from this global trade order.
It's interesting because since I moved to New Zealand in 2007, so I've seen a few successive governments, and I think one of the things that's been a common denominator that New Zealand has always sought, a rules-based trading. That as a export nation, as a small independent exporting nation, it's essential for New Zealand that there's rule-based trading. So I think the bonus may be that perhaps other countries go, oh, actually, that's quite a good idea. But I think that's always been something New Zealand has lobbied for hard.
So how realistic is it to form a new club of these various countries?
Well, it depends, doesn't it? I mean, how willing these new countries are, or how able even these new countries are to stand up to the United States, because it's a huge market for so many exporting countries.
What other commentary did you see at the weekend from around the world that kind of stood out for you?
I think there was just generalized fear. And one of the things that I thought was quite interesting was, just looking at what the impact this is going to have on the United States, because obviously their end game here isn't to make their economy worse, it's to make it better. And yet the commentary is all around sort of, this is going to create higher unemployment. This is going to create higher inflation. This is going to mean that, interest rates need to go higher, stay higher for longer, or, possibly the other scenario where they go into recession and then interest rates need to be cut. And even people like the chair of the Federal Reserve was saying the tariffs were higher, significantly larger than he expected. So I found that fascinating. It's just fascinating.
Have you heard any kind of argument, any rational argument that support Trump's actions? Is the reasoning behind this is that America has a massive debt and this is a way of addressing that?
From what I understand, and this is possibly too simplistic, but that they have 3 goals. Their first goal is access to markets, that for some reason, they feel that they have been abused, or, I think Trump was talking about raping and pillaging, but they want better access into markets. So this is a very blunt instrument to force all these 70 countries that are now trying to negotiate with Trump to give the United States better access into their markets. The other thing is that it will, it is revenue. It is a huge amount of revenue. And I think, that may well serve to bring down the debt. It may well serve to fund, the tax cuts that he's promised, any of those sorts of things. And the third thing that they're looking to do is to sort of bring back manufacturing to the United States so that they can improve the economy and create jobs and all of those things. But the commentary that I've seen around that is that manufacturing no longer creates a huge number of jobs anyway, because it's highly automated and robotic, and all of the automating and robotic machinery will have to be imported from China anyway.
I don't know if you had a chance to look at that clip from the MSNBC presenter Rachel Maddow talking about where Trump got his tariff idea from initially. In his first term, he got his son-in-law, Jared Kushner, to find him an economic advisor. And Kushner went to Amazon and looked at basically the covers of books.
Not like reading the books, because you can't do that on the Amazon website. He was just looking at the covers, looking at the titles. And he found a book title that he thought was so cool,
called Death by China by Peter Navarro. And then it turns out that Navarro has used an economics expert in many of his books called Ron Vara.
When Trump won the presidency and entered the White House, this Ron Vera started circulating a memo around Washington in support of Trump using tariffs in trade policy. According to the New York Times, the memo had been, quote, sent from an email address purportedly belonging to Ron Vera. At one point, Ron Vera wrote in the memo that Trump could, quote, ride the tariffs to victory. Problem is, Ron, the economics expert that Peter Navarro has long cited to explain why he's so gung-ho on tariffs, this person, Ron Vera, is a made-up person. He is a fictional person.
Ron Vara is invented, and that he's actually an anagram of Navarro's name. So Navarro, who uses an invented economist in his book, is the expert who's been advising Trump on these tariffs.
I think that, like much of this, is astonishing. I think the whole world is like sitting back and looking at this and it's just gobsmacking. It's really upended, so many things for people.
So let's go to Monday New Zealand time, day 5. And turns out New Zealand shares had their worst day since COVID 2020.
It comes as the fallout of President Donald Trump's sweeping tariffs filtered through to the international markets. The New Zealand dollar has also fallen against most major currencies, touching a 3-month low against the US dollar.
People were obviously starting to think about their KiwiSaver accounts. Is there some panic going on?
I think it's hard not to be worried about it, especially now because, people can easily see what their KiwiSaver is doing, which is a good thing. But the general consensus, I think, always, like in, during COVID or now or, with the KiwiSaver is that it's not a short-term investment. It's a long-term investment. And so there will be volatility. That's one thing markets have always, is volatility. But the best thing is to just try to not panic and ride it out. Rebecca Stevenson has a story on Business Desk today where she was speaking to fund managers, Milford and Fisher Funds, and they manage heaps of KiwiSaver funds, and they are, to some degree, seeing this as an opportunity. That's the thing. When there's blood on the floor, it does create opportunity.
Explain to me how that creates opportunity.
For some fund managers, what they did was they have their cash assets, so they have more cash available to buy what they may see as, a good bargain because it's fallen so far, and to add that to their portfolio. Or, they may have pivoted out of some stock or investment in one area and then gone back in when the price is a little bit more attractive.
That's also risky, isn't it? Isn't it about when do you actually buy back in? Because we just don't know what's going to happen next.
That's one of the things that has been particularly interesting and alarming about the last few days is this is like uncharted territory, I think, for a lot of investors. I don't think anything like this has happened in markets before. And so, it is a question of like, how long do you hold your nerve for? When do you buy back in? Or do you completely exit? I mean, do you turn to government bonds because they may be, slightly less risky? I think it's probably a great time to be in the position, in that position, but also must be slightly terrifying.
And really, we saw that on Tuesday, didn't we, when
US stocks have been swinging wildly today as traders hope Donald Trump's tariffs might be eased or scrapped. The S&P 500 fallen for a third day in a row, now officially in bear market territory after dropping 3.4%. Not just a US problem. European stocks, they dropped over 4%. The FTSE 100 taking a 4.4% hit. It's in London. Over in Asia, some big falls there. Hong Kong's Hang Seng down 13%. It's its worst since 1997.
But there was also a rumour around that Trump was going to give these tariff impositions 90 days.
Spoke to Caroline Leavitt, the White House press secretary, on the phone just a short time ago, and she tells me it is, quote unquote, fake news that the White House is considering a 90-day pause. So the White House pouring cold water on this idea, wherever it came from.
I think that's been a feature of this all along, though. It's been moments where the market has thought, oh, okay, maybe it'll be all right for a bit. Suddenly there'll be another headline where Trump will say, no, I'm not doing that. I'm going to add to this situation by imposing another 50% on China or whatever. And then the market reacts to that. So it is very headline driven, I think.
I found it also interesting on Tuesday what happened here.
It's all prompted the hardest line yet from the coalition in New Zealand, with Prime Minister Christopher Luxon today denouncing the shift away from agreed rules and the prospect of further pain.
A trade war is frankly in nobody's interest. It will slow global growth, it will hurt jobs, and it will reduce the amount of money we have in our wallets.
And it was like a kind of a crisis meeting.
A lot of that was looking at the sort of bigger picture, right? Because I think, most government officials, like the Prime Minister himself, he said, we don't think tariffs are a good idea. We don't think tariffs are the way to go, but New Zealand isn't going to retaliate. New Zealand isn't going to turn around and try to, impose a similar tariff on the U.S. Because, again, the 10% is possibly manageable. It's more, I think, the impact on New Zealand if there's a global slowdown, because obviously, we export so many products, and if there's no demand for those products, then that's when, that will start to feel the repercussions here. And so I think, yesterday that's really what she was talking about. New Zealand exporters are very resilient and very nimble, but there are definitely risks out there for the economy.
Yeah, well, they might be resilient and nimble, but if consumers feel like they haven't got the money to buy our wine or our beef, then that doesn't make much difference, does it?
No, although, the advantage to exporting food is that it's food.
Trump slapping now a 104% tariff on China. That's the latest. And actually, by the time this podcast goes to air, we don't know what will have happened.
Exactly. And I was trying to think about, it's so complicated, isn't it? Like how all of this actually works. In terms of, like, say, a big importer in the United States, like Walmart, that I think they get 60% of their product from China. So does that mean that they now will be paying, because it's the importer who pays, double what they were paying a week ago? And surely it must mean that, except, the backstory to that is, of course, Walmart is trying to pressure its suppliers in China to lower their prices in order so that, China takes some of the impact of that as well.
So if Walmart chose to pass that on to consumers, then it would be more than what you're paying for a bicycle, say, in Walmart. If you can you buy a bike in Walmart?
Yeah, I think you can buy just about anything in Walmart.
Exactly. So say if you bought a bike in Walmart made in China, what you're paying for it this week is $50. Next week it'll be over $100.
That's right. And it essentially doubles.
So the importer, Walmart, is having to pay that higher tariff.
Yeah. At the border to customs, Walmart pays the tariff. And then they decide whether or not they are going to increase the price of the whatever it is in the store. So it's the consumer, which I think the commentary that I've seen, it's inevitably the consumer who pays. So the consumer then has to pay double for something, and they probably won't buy it. Or maybe they'll only buy one instead of, 2 or whatever.
So it's up to the importer to decide whether they put pressure on the supplier to drop their prices.
Yeah. And for New Zealand right now, the 10% tariff is mitigated to some degree by the fact that the New Zealand dollar has fallen quite a bit over the last week as well. That certainly mitigates part of that 10% for the importer in the United States, because their U.S. dollar is able to buy more. That's why the New Zealand dollar is seen as such a good buffer in times like this.
The Reserve Bank has dropped the official cash rate again, but really, is that going to make any difference to New Zealanders?
A lower cash rate definitely helps, because it takes some of the interest rate pressure off people. As long as banks obviously pass on the interest rate cut to mortgage holders. I think it helps with sentiment as well, because, it's one way to sort of support the consumer and support, business investment and all of those sorts of things. So, yeah, I definitely think it's a positive.
Is anybody predicting what's going to happen, when this is going to end?
I haven't seen anyone come out and say, we've hit bottom. I don't know.
That's the
million or the multi-trillion-dollar question, I guess.
That's all for today. The Detail is a newsroom production supported by RNZ and NZ On Air. This episode was produced by Gwen McClure and engineered by Jeremy Ansell. Thank you to Rebecca Howard. I'm Sharon Brett Kelly. Mā te wā.